Money Vikings, all right, Money Viking G here. I got a good one for you today. A couple of thoughts on the current state of the market and economy. And again, the angle here is how middle class wealth builders and investors can navigate turbulent waters. Read an article recently about Gen X. I'm a kind of on the younger side of Gen X, but still of that generation. And Gen X is definitely having a hard time right now. Part of that is this generation, many generations have, but this generation in particular, in terms of their working life, has lived through quite a few economic traumas, you could say, and a lot of turbulence in terms of job markets and the way it was kind of the first generation where, things like higher education was going up very high in cost, housing costs were going up rapidly, just cost of living in general was going up quite rapidly. And in addition, there were a lot of sort of various shocks to the system that occurred over the last sort of 25 years, which a lot of us, have lived through, millennials alike, etc. So bottom line is that, Gen X in particular has to be specifically careful, particularly careful, not specifically as well, but particularly careful right now at this time. This is crunch time in terms of preparing and sort of wealth building and retirement type stuff. So kind of a difficult time specifically for that generation, but also a difficult time for others as well, as we all know. So a lot of turbulence going on. As on the macro level, it's not a political show, so nothing about this political. But on the macro level, there's a goal, I believe, of trying to have the United States increase its manufacturing capacity on different fronts. I think that's something that broadly people agree with, I think, and would like to see happen in the United States. Sorry about the noise. That's something that broadly people would like to see. The way it's done is up for controversy and is up for debate, and that's what you'll see a lot of people debating about. And as we go through that process, you're going to see a lot of turbulence. The reality is that a lot of people don't realize that as a country, we spent trillions of dollars on a couple of wars that are now long gone and over, but the country did spend 20 years in various conflicts. And those cost the country a lot of money. It was the first time in the history of the country, I believe, you can correct me in the comments if I've got my historical facts wrong, but I believe it was the first time that we had these very long, prolonged wars without any increase in taxes on anyone. Even the wealthiest 1% to 5% did not pay a single dime more in taxes to help fund trillions in these conflicts. So anyway, that's the past, but we are now in debt. So we have a debt crisis that we're dealing with. We have changes in the sort of the world order, the monetary system. And bear with me, because I'm going to get to the heart of what we can do as middle class investors. I'm just giving you context in terms of how we got here briefly, and what is going on in the broader society and the debate. So part of remanufacturing, becoming more of a manufacturing powerhouse, that's to increase our wealth and it's to increase our security and resiliency. So I think that's a broadly understood concept and broadly something that people want to see. Most political spectrums agree to that. It's just the way that it's done. So under the last administration, there was a huge investment in that type of stuff. And a lot of different things like that. And now we're going through the whole thing with the tariffs. So we're going to have to see how this plays out, how this disrupts things. It's obviously disrupting things. But here's what we can do as middle class wealth builders to protect ourselves and continue to build wealth. Number one, we're finally, as of this recording, we're finally starting to see Bitcoin behave the way that we thought it would, as digital gold. So it's actually going up pretty well right now, and it's holding its own, whereas the broader stock market has been losing ground. Bitcoin has been either securely on a secure foundation, and now it's actually going up. So that's quite interesting to see Bitcoin work the way that those that have thought about it for a long time thought it should work. I've been, a critic of how it has not behaved properly for quite some time, but it now seems to be behaving the way the theories have played out. It's supposed to be a hedge against inflation and instability and money printing and all the different things that governments do to stabilize the economy. It's supposed to be its own class there. For a while, it was basically just behaving as a tech stock. And now it seems to be changing before our eyes. We will see. Of course, time will tell with everything. But again, I hold that that should be part of a strategically diversified portfolio. So that's the second thing. The second thing we must do is have strategically diversified portfolios. I'm interested at the moment in more exposure to precious metals, and not just precious metals, but minerals, rare earths, things that are mined and used in the processes of manufacturing. I think that is another place that's probably a good place to be at the moment. Probably good, well, this would have been in the past. I would not be selling right now. I would be trying to grin and bear it and get through the turbulence, trying to work on that so that's the third thing, is work on your psychological strength when it comes to approaching the markets and your investing. Hopefully you were strategically diversified in line with your risk tolerance. Those are the magic things to blend. Strategically diversified with your risk tolerance. If you had done that before, which you might have done if you watch our videos, you probably did. If you'd done that before, you're not really freaking out right now. You're just going to sort of stay the course. Yes, the assets have gone down. Yes, the accounts have gone down a bit, blah, blah, blah. But they probably haven't gone down enough where you're freaking out. It's just a normal market fluctuation. I know it's a little bit of an abnormal time, but it's a normal market fluctuation. Nothing that should not be unexpected. You know, there are down years in the broader market. Most years are up, but you will get at times, you know, negative 38%, negative 40% drawdowns. Those will happen. I don't know what the average is. Someone out there can look it up and tell me, or write it in the comments, please. But you'll get drawdowns probably. I mean, my experience, or what I can tell, I mean, every maybe 7 to 10 years, you're going to get a pretty substantial drawdown. But you have to remember, you've had 7 to 10 years of big gains. So it goes up, 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 comes down like that, up, 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 comes down like that. You know, as you can see over time, again, time in the market beats market timing, as we all know. And the fourth thing I want to mention is something I always hit upon, and it really changed my paradigm in terms of freaking out about the market or worrying about investment portfolios. Your investment portfolio, it really doesn't matter day to day exactly what it's worth. Okay, let's say you have an investment portfolio worth $400,000. One day it's, you know, this is literally day to day because of the market. And if you have you're strategically diversified among bonds and cash and Bitcoin and stocks and S&P 500 index and ETFs that you think are good sectors, etc. One day it's, you know, if you have 400,000, the next day it's going to be 390. Then the day after that, it's going to be 397. Then the day after that, it's going to be 402. Then it's going to be 403. Then it's going to be back down to 401. Then it's going to be 405. Then it's going to be 407. Then it's going to be back down to 402. Then it's going to be to 403. Then it's going to be back to 404. Then it's going to be down to 397. Then it's going to shoot up to 405. Then it's going to shoot up to 410. Then it's going to go back to 405. You see the point. Every day that's changing. It doesn't matter. It doesn't matter day to day. You're never having a magical day where you're just taking all that out. You're building a passive income machine. So the ideal is you've got that 400 and blah, blah thousand, and you're drawing, you know, I'm just throwing out ideas here, but you're drawing $3,000 a month off of it. And it's able to fluctuate and grow over the long run, and you're taking a small amount out each month to live off of. That's a passive income machine. It's not, you don't have to work for that money. You basically have a passive income machine. So that was the last thing I would leave you with. Just keep that North Star in mind as you're working through these turbulent markets. But anyway, there's some interesting things happening. Let's keep up on it. Please like and subscribe. Appreciate you guys joining and always checking out our content. And again, this is about middle class wealth building, all the tools that we can use to practically get ahead in a very reasonable, rational, calm approach. So thanks a lot for tuning in. Check y'all later. Bye.